Well, this is $1 million question. What's the future of Bombay Stock Exchange Sensex in 2030 or future? Well, each year the Sensex is a beacon of financial hope for millions of Indians. But what about 2030? Will the Sensex still be relevant for the next generation of investors? To predict the future of Indian markets, we will need to start with how India will change over the next 12 years. Here are some facts worth considering. India's population is set to surpass China's by 2030, with our economy producing more millionaires than China's, and India projected to be a $5 trillion economy by 2030. According to a UN report, by 2050, India could have 1.6 billion people, overtaking China as world's most populous nation. This will be achieved through high birth rates and increased longevity. So the share of the elderly to that of the working population is expected to drop from 20% presently to just 8% in 2050. The average Indian household will have also more money than an average European household by then. The impact of these demographic changes on financial markets is significant. As we saw in 2015, people tend to become more cautious as they get older and their wealth gets ramped up. Okay. Old age portfolios tend to be conservative, young age portfolios are less so. So while senior citizens tend to be cautious, the young tend to have lower risk tolerance, which could lead them towards riskier assets like stocks and real estate. This is why it's not just a question of how markets look today, but how the next generation will invest. Okay. While all this seem like an excuse for buying stocks and property, let's not forget that over the next 25 years, India will see an explosion in demand for transport, housing, and healthcare. The healthcare market is expected to be worth $280 billion by 2025, up from 58 billion presently. Okay. That's going to be a huge market even when you subtract out corporate hospitals and foreign owned hospitals like Fortis and Max Healthcare that are already making millions of dollars. There is still a growing opportunity among more practitioners to be exploited by insurance companies. The sector is expected to grow 56% by 2025 according to the World Health Report. For healthcare investors, it may be prudent to wait until later in this century to invest in stocks that would become dominant over the next 100 years. But investing in healthcare companies today is beneficial because most of them are likely making money and are poised for even bigger growth in the future. This year, Forbes had ranked 47 Indian stocks into 4 categories: disruptive but not yet disrupting, but not yet consolidating. Okay, successful incumbents, and those will stand out. Healthcare was the top of Forbes list among disruptive companies. If you have the foresight to invest today in companies that are poised for big growth, then you should consider investing in companies like ICICI Prudential, Indus and Fortis Healthcare. Okay, so the healthcare industry is as good as it gets when it comes to long-term growth with a promising future. As long as there is demand for healthcare products and services, and regulatory scrutiny will not prevent these companies from handling risk, they are sure to prosper. Investors who believe still in purchasing stocks today will find plenty of good opportunities. Investing in stocks that are already making money seems like a good idea too, because they tend to perform well going forward. Even if growth isn't great right now, a good idea would be to invest in healthcare stocks, technology stocks, and some of the emerging sectors like what we have done in our own portfolio, like electric car, battery manufacturers. Okay, it's also worth considering what non-financial companies will look like over the next 12 years. It's no secret that with the ever passing year, technology is eating up more and more businesses, sometimes wiping them out completely. If we learn anything from history, it's not to be surprised when technology changes the way we live. Okay, while it can be difficult to predict which companies will survive in the future investors should consider investing in those that are becoming more relevant to technological evolution. Okay, so this is why we are bullish on companies like Reliance Industries. Okay, so as the year goes by, okay, this company is going to be investing more and more money into technology, and as a result will have greater control over its supply chain, distributing networks, and customer relationships. The company has already begun making these investments by investing $7 billion over 3 years in expanding its Reliance Geo market. It also spent $1 billion to acquire spectrum for 4G services across India back in 2012. It's also investing in solar power. In December 2015, Reliance announced that it had begun construction on what it called the world's largest single-site solar plant in Andhra Pradesh. The investment was worth close to $500 million. At present, its growth is being supported by the government and other companies, but investors should expect to see greater benefits from Reliance in 2030 as the company invests more and more money in technology, leveraging increased demand for new products and services, and possibly challenging Amazon. Yeah, other stocks are Innovalite Inc., which produces the film solar panels based on the proprietary process Sensata Technologies Holding, and which specializes in vehicle manufacturing equipment and energy management services, and the Boeing Co., which provides aerospace products and services. In 10 years, these companies' revenue are expected to be much larger, driven by increased demand for new products and services. Their growth will also be driven by government initiatives across the country, specifically the 21st Century India Growth Strategy being undertaken by Narendra Modi government, which is why we are bullish on the Nifty 50. Okay, so now that we know the impact of demographic changes on financial markets over the next 25 years, what should investors do? It's a good idea to invest in companies that are already making money and have a solid business model. If you want to invest in stocks, it's also important to consider how the companies will grow over time. Do your thorough research and invest in penny stocks that have no red flags and high dividend returns. Invest wise, trade smart, take care, peace.